there is some sort of bad news hitting Shatta Wale again. This time, it is not with the FBI concerning his Lamborghini, which was seized, nor is it with the economic and organized crime concerning the Lamborghini, Adu Buahene and Nana Kwabena Amua, but this time it is with the Ghana Revenue Authority. Shatta Wale is under serious investigation over unpaid taxes. Wicked Blogger Ghana can confirm to you 100% that Shatta Wale is pleading behind closed doors, calling some top politicians and officials to come to his aid. Sometimes, as a normal human being, you need to apply common sense in all your dealings, a trait Shatta Wale and his team do not possess. Before you hit the Ghana Revenue Authority, note that the laws of the country allow it to collect certain taxes from individuals and celebrities. In Ghana, when a musician makes money from shows, royalties, streaming, or endorsements, all of that counts as income, and the Ghana Revenue Authority expects income tax to be paid on it. Usually, when an event organizer or company pays a musician, they deduct a portion first as withholding tax before giving the balance. That deducted part goes straight to the tax office and is later balanced against the musician's total tax bill for the year. If the musician is big and their annual earnings from shows and tickets cross the VAT threshold, they have to register for VAT. This means that when tickets are sold for their concerts, VAT is added, collected, and then paid to the state. When it comes to properties, it doesn't stop at just buying them. Once the musician owns a house or commercial building, they must pay property taxes every year to the local assembly where the property is located. If later the property is sold for profit, capital gains tax also comes in, and that is charged at 15% of the profit made. Even gifts are not exempt. If a musician is gifted land, cars, or buildings, those are taxed as well, with a gift tax set at 15%. So whether the money comes from music shows, streaming royalties, endorsements, or even assets like land and houses, the state has its eyes on it through income tax, VAT, property rates, capital gains tax, and gift tax. Now let's zoom in on Shatta Wale himself. When Shatta Wale sold his music catalogs, what he really did was hand over ownership of his past works in exchange for a lump sum. The Ghana Revenue Authority GRA looks at that money in two ways. If it's treated as a personal one-time disposal of an asset, then it falls under capital gains tax. Ghana charges 15% capital gains tax on the profit he made from the sale, meaning he takes the amount he sold the catalog for, subtracts what it cost him to build or acquire those rights, and pays 15% on the balance. But if the catalog deal is structured as part of his music business, say the rights were held under his record label company, or he regularly engages in licensing and sales, then the GRA treats it as business income. In that case, it gets pulled into income tax if in his personal name, or corporate tax if through his company. Business income is taxed at the normal graduated rates for individuals, or at 25% for companies, which can sometimes be heavier than the flat 15% capital gains tax. VAT is another issue. If the buyer of Shatta Wale's catalog is based in Ghana and will be exploiting those rights locally, then VAT and the associated levies NHIL and Get Fund come into play. He would have to charge VAT as part of the sale and remit it to GRA. But if the catalog was sold to a foreign company that will use the rights mainly abroad, VAT might not apply locally, although the income itself remains taxable in Ghana. Now, think about his recent purchases, a Lamborghini and a Rolls Royce. These cars don't come cheap, and the tax burden doesn't stop at the dealership. If you bought them locally, the sticker price already included VAT and other charges, meaning the GRA has already collected tax through the seller, but if he imported them directly, which is common with luxury rides, he would have faced customs duties and import taxes at Tema Port. Ghana calculates duty on the cost, insurance, and freight value of the car, then slaps on VAT, NHIL, Get Fund levy, African Union levy, ECOWAS levy, and in some cases, special import levies. Because both Lamborghini and Rolls-Royce fall under the high-end large engine category, the import duty percentage is on the higher side, sometimes 20 to 35% of the CIF value, plus the other taxes. On a $300,000 Rolls-Royce or a $400,000 Lamborghini, that's hundreds of thousands of dollars going straight into government revenue before the cars even hit the road. The GRA also watches lifestyle against the declared income. If Shatta Wale declares a certain amount of income from shows and sales, but suddenly purchases multi-million city luxury cars, that can trigger a lifestyle audit. They will ask how he could afford them, and the catalog sale becomes part of the explanation. That's why the catalog money is key. It shows legitimate income that can justify such expensive acquisitions. Without proof, the GRA could suspect undeclared earnings and demand explanations or slap penalties. There are more layers. If the catalog deal included ongoing royalty payments, then those royalties are taxed annually as income. If companies pay him fees for performances or endorsements, they are required to withhold a portion as withholding tax and remit it to the GRA before he gets the balance. Those credits then get reconciled when he files his tax returns. On the property side, if he later decides to use the catalog money to buy land or houses, annual property rates to the local assemblies will also kick in. If he sells at a profit in the future, capital gains tax applies again. So in practical terms, the GRA expects Shatta Wale to do three main things. First, declare the catalog sale as taxable income, either under capital gains or income tax, depending on how the deal was structured. Second, pay or account for the heavy taxes and duties on the Lamborghini and Rolls-Royce, whether they were imported or bought locally. Third, keep up with ongoing obligations, such as VAT, withholding tax, and annual property or lifestyle audits tied to his earnings and spending. Wicked Blogger Ghana has picked an intel from our source that the Ghana Revenue Authority are investigating Shatta Wale. Most of the assets he has been flaunting on social media have been uncovered not to be his, including most of the cars, the Trasaco mansion, and a few more. Also, during their first meeting, they uncovered that most of the revenues Shatta Wale brags online to have been achieved with his music were false, together with a claim he sold on God for $3.5 million. The assets in his name and revenues that the Ghana Revenue Authority managed to gather in Shatta Wale's name had taxes calculated on them and presented to Shatta Wale's lawyers. He is, however, using people in power to bargain for his freedom, citing that his government is in power and needs to be protected. He also made mention of other musicians who equally deserve to pay taxes on their assets, including names like Sarkodie and Stonebwoy. GRA is handling this case behind closed doors. Failure for Shatta Wale to comply, or if he decides to make noise with it, then details of the investigation could be made public. At the end of the day, Wicked Blogger Ghana is not here to hate on Shatta Wale or any other celebrity. We are only here to remind you that once you live in Ghana and you flaunt wealth, the Ghana Revenue Authority will surely come for you. Whether you are a dancehall king, a rap boss, or a silent businessman, the laws are the same. If you make money, you must pay tax. This is Wicked Blogger Ghana. Don't forget to smash the subscribe button, follow us on Instagram at WickedBloggerGH, and keep your eyes glued here for the rawest updates.